Hey guys, what's up? This is Akanksha and welcome back to my YouTube channel. This video is the continuation of my previous video where I had talked about how does technical analysis work, is it useful, what is candlestick and candlestick chart, and different kind of market trends. That is a very useful video for a beginner. So if you haven't checked that out yet, then please do. I'll put the link in the description box below as well as here, so you can check that out. And in this video, I'm going to talk about another aspect of technical analysis, that is support and resistance. Technical analysis is a tool that is very useful when used the right way, and the best way to use it is to study what has happened in the market before and let the chart guide you through the process of trading. So let's start with support and resistance. The concept of trading levels, support and resistance are two of the highly discussed part of technical analysis. Support and resistance are area in the market where price is most likely to react. Support is the area of the price level which acts as the support. That means the price of an asset likely to bounce back above that area. And the resistance is the area in the chart which acts as the resistance. That means the prices of any asset likely to drop down from that particular area. These support and resistance areas are based on historical data. That means previous support and resistance areas. I'm not going to explain the psychology behind this concept because this is going to be a beginners friendly video and it is going to be really long. So if you want me to cover that in a different video, then please write in the comment section below and I will do it. And now I'm going to give you a few examples of the charts to explain support and resistance better. Let's consider this chart. Here you can see this is an uptrend chart making higher highs and higher lows. Here the higher highs are not crossing the previous lows, so the uptrend is intact. In an uptrend, the previous resistance area can become the support area. With the impulsive up move, the prices goes up breaking the resistance. And when it gets pulled back, it retests in the support area, which is the area of previous resistance. You can draw a rectangular box to define that area, and that will give you a clear picture and you can work on your entry and exit strategy. Now let's consider this downtrend chart pattern. Here the candlestick chart is making lower highs and lower lows. So downtrend pattern is intact. The lower low is below the previous low, so the market is still in downtrend. In a downtrend, the previous level of support is expected to become the resistance. With the impulsive down move, the prices pulled back, breaking the support, and it retests in the resistance area, that means in the previous support area. You can draw a rectangular box to define that area and that will give you a clear picture to work on your entry and exit strategy. Let's take an example of MRF Limited chart to understand the concept of support and resistance. In this chart, you can see the price comes up, breaking this resistance, and when it pulled back, the previous resistance area becomes the support area. So when the price is pulled back in these areas, it will take the support in the previous support or resistance area. I will show you how to enter and exit the market at the end of my technical analysis section, so make sure you hit the subscribe button and look out for my upcoming videos. So just to recap, what we have learned so far is that support occurs where a downtrend or pullback is expected to pause due to a concentration of demand. And the resistance occurs where an uptrend or the impulsive up move is expected to pause due to a concentration of supply. At first, the explanation and the idea behind support and resistance seems easy, but you will find out that support and resistance can come in various forms. Determining the support and resistance areas can be really important for three reasons. First, it will help you decide your entry and exit point. Second, it will help you decide your stop loss and target. And third, it can help you identify the reversal in charts. So that was my video, guys. Thank you so much for watching this video and I really hope you find this video helpful, and if you do, then please give it a big thumbs up, and if you have any question, then please write in the comment section below and I will try to answer those to the best of my knowledge. And in my next video, I will be talking about another aspect of technical analysis, so make sure you subscribe to my channel, and thank you so much. Bye bye.